This is the Savvy Investor radio show and podcast. For help with your retirement, schedule a 15-minute phone conversation with the team at ProStatus Financial Advisors today. Just call 866-597-1040 and at thesavvyinvestorradio.com.
Should you stick your head in the sand when it comes to market volatility, or should you be the opposite? You know, Chicken Little, the sky's falling, or somewhere in between? Welcome in, Savvy Investors. Lawrence Kiley and Samantha Nash are both financial planners with ProStatus Financial, and together with the entire ProStatus team, they're here to help grow, keep, and distribute your wealth in the most tax-efficient manner possible. Let me tell you how to reach out. It's 866-597-1040. Once again, 866-597-1040. My name is Chris Swan, and I'm pleased to be joined, as I said, with Lawrence Kiley and Samantha Nash. Glad to have you both here today. How are you?
Doing well, thank you.
Yeah, doing good. Nice to be here.
Well, good. I'm glad to hear that. You know, it is Easter weekend, and it looks a little different this year than I think it does for a lot of people out there, primarily because eggs are so expensive. So I know in our house, we're adapting with that. We're doing wooden eggs. My son is going to be painting. And then also we've got a new dog in the house, a new puppy. And so hiding candy, particularly chocolate, that is off limits. So knowing that the parameters are different and adjusting with those is kind of a parallel as it comes to retirement, knowing that it is going to look a little different. And I want to start off by talking about the markets. Volatility has crept back into the picture. Wall Street has suffered, obviously, some very heavy losses in just a short period of time in reaction to the Trump tariffs. There's been some bounce back, of course. And it might be difficult for people to not look at their retirement accounts to see evidence of the roller coasters, the ups and the downs. But there are studies that say doing that too often, quite frankly, it's not good. So is there a happy medium here, a Goldilocks approach, not too much, not too little? What should people keep in mind about their investments during these turbulent times?
Yeah, I mean, I think in the current environment that we're in, you have news everywhere. You have it on your cell phone. You have it on the radio. You have it on the TV. I mean, everywhere you look, there's news about what's going on. So it's hard to completely pull yourself away from what's going on. But at the same time, looking at it every night before you go to bed is probably not the best thing to do. I mean, if you want to get some sleep and be productive the next day, I would say don't look at it as much. I mean, history has repeated itself time and time again. We know that there is a drop in the market every 2 years, and then every 7 years, there's, I don't want to say a crash, but a dip below 30% or above 30%. So we know this is coming, but really with planning, that helps to ensure that when there is a dip, that you don't have to freak out.
Yeah, I mean, I think the biggest thing is, how do you have your portfolio set up? What buckets do you have set up for yourself in retirement? Because what we see is with a lot of our clients here at ProStatus, you know, you're 3 to 5 years away from retirement, or you're actually in retirement. So you have a lot shorter of a runway to bounce back from these downturns in the market. So what happens is we want to look at, how do we set up certain buckets to where you're not as concerned to what's happening in the market. Obviously, if the market goes up, you're very happy. If the market goes down, you're not happy. But really, what can we control, right? So we want to set up buckets, right? We want a bucket that's set up for income. That way, if the market does go up, you know, our lifestyle is great. We're still making the money we need in retirement. But if the market goes down, our lifestyle is still the same, right? Our lifestyle is not changing. We're not having to go back to work. We're not having to eat ramen noodles now. We're still maintaining the lifestyle that we wanted to live in retirement, because we've set up the proper buckets and we've done proper planning for our overall portfolio. So we want to make sure that that income bucket is set up properly first. So, right, what income do we have coming in? Social Security, rental income? Do we have a pension, or do we need to set up our own private pension so that we do have that money coming in regardless of what happens, right? That's the biggest thing, is regardless of what's happening in the market, I have my money on a monthly basis coming into me consistently. And then with the other bucket of money, we can decide, how risky do we want to be? Do we want to be super risky with that money, or do we want to be conservative? At that point, it's really, you know, what you can handle, what you can sleep at night with. Because again, if the market goes up, great. If the market goes down, not so happy, but my lifestyle is not changing. I'm okay regardless of what happens with that market volatility, because I've done proper planning and I've set up the proper buckets for my retirement.
I just want to go on the record there and say that I actually did have ramen noodles the other day. Not out of necessity. It's just kind of a, you know, that comfort meal from earlier times. But yeah, you don't want that to be the entirety of your diet in retirement. That's going to have health implications and other things. How difficult is it to make new clients or existing clients understand that it is not an all or nothing strategy. These different buckets, there is money where you can very much still think like a younger investor and say, there's an opportunity here to grow, but at the same time, you don't want to swing for the fences. You don't want that to be the entirety because, as you said, ups and downs, you never really know when the bottom is. Even if you go in right now, it could go lower, and then that could be devastating. How tricky is it to make people understand that?
Yeah, I mean, it's not too tricky because really it's part of our process. When what happens when a radio caller calls in, they have an initial conversation with us where we're getting to know you. We're asking a lot of initial questions to get to know what are your goals in retirement? When do you plan on retiring? What type of income do you have, coming into you for retirement? Do you have secured buckets of income coming in? What does that lifestyle look like for you? So we're getting an idea of what that picture might look like. And then we're able to discuss, okay, you need this amount of income. How do we set that up for you, right? Are we using a dividend producing portfolio? Are we using an all equity portfolio of preferred stocks? Or do we need to go out and buy your private pension, right? And buying your private pension, a lot of times what that looks like is using an annuity, right? How do we use the least amount of your money possible to generate the income you need in retirement so that it's secured, right? The main goal when it comes to retirement planning is making sure that we have that income secured for you. That way, everything else is really just extra. You need a new roof, you need a new car, you're going on a huge vacation. That's just extra that you can pull from that extra money you have because we've secured that income bucket. So once they understand that we're breaking this into certain buckets of money based on what your goals are, radio callers really understand that I can set up different portfolios, I can set up different buckets, and we can use different segments of our money to accomplish those goals, and that there's way to do that so that I don't have to worry about exactly what the market is doing on a day basis because I have someone in my corner looking out for me. So if you're interested in this, if you don't have a plan, if you haven't spoken to your current advisor yet, you want to figure out, how do I buy myself a private pension? How do I set up certain buckets of income? How do I secure my income in retirement? How do I set up my portfolio so that I'm not worried about these market fluctuations and the volatility in the market? You have to give us a call, 866-597-1040. Let us take a look at your current plan. Let us have these conversations with you and ask you these questions so you can determine, what does my retirement really look like for me and can I accomplish it? But again, that all starts off with giving us a call, 866-597-1040.
That's 866-597-1040. If you're over 55 and you're serious about your retirement and you're nervous about the recent hiccups that the market has certainly seen, the ups and downs, and maybe you want to not get off the roller coaster, but have a little bit of a calmer track for a little bit. The team at ProStatus Financial, they're going to personally create a complete retirement plan for you. This includes a 401k X-ray portfolio protection plan to do just that, to hopefully level out the track a little bit. Also going to run that income analyzer, find out how much money you need in retirement and how to make sure that is consistent money, income for life, guaranteed to come in regardless of what the markets are going to do, regardless of how long you live, so you can see how much income you start to generate from your savings. And of course, I know tax deadline is in the horizon, is in the rearview mirror at this point, but taxes are a constant thing. Tax planning and Roth conversion analysis. If you save $500,000 or more in 55 and older, congratulations, you've done a great job. The next step, of course, is letting ProStatus help you out with that. The number 866-597-1040, or going online, thesavvyinvestorradio.com, clicking on the 401k X-ray button on the front page. Schedule that 15-minute conversation right there. That is thesavvyinvestorradio.com. I have to imagine in the past couple of weeks, in light of all the volatility, you guys have been getting calls, again, from the radio or just clients that you have existing right now. What do those look like? And is there a difference in the concern that clients have versus people that are just calling in who are prospective, that are, maybe just a bit worried with the volatility?
Yeah, I mean, there's definitely a difference. I have an example. We had a client that came in 6 months ago, he had retired, had his 401k rolled over to an IRA, and it was all invested in technology stocks. So no diversification. Came in because his whole goal was that he wanted to have enough money in retirement. We sat him down and we explained the 3-bucket strategy that Lawrence was talking about. And we showed him, you don't need to take this much risk. Based on the income that you already have coming in, there's only a little bit of gap we need to fill, which we were able to do, take some of the money, put it into an income producing annuity. And all of those other assets were really just there to do extra fun stuff. So even if the market did drop, mind you, we did diversify him and reduce his risk because he was scared, and thank God we did. But really, what his goals were, we were able to fill with income, and the rest was just fun money. So because of that, we don't get so many calls when there's drops like this because of the way that we have planned. Is most of our clients already know, based on the income that they're receiving or the income they're going to receive from these income producing strategies, they're going to be fine. Are they still scared? Absolutely. But vice versa, we have a ton of prospects that are calling us, again, because every day they're getting different news of tariffs, the markets, all this stuff. But once we have them come in and we show them their plan and show them the recommendations, it's a totally different conversation.
And one of the other things that we do for people that call into the radio, again, that's 866-597-1040. One of the big things that we do is we do a correlation analysis or a portfolio x-ray. So we look at what you're currently invested in. A lot of people have a lot of different funds, right? You might have a lot of mutual funds, some ETFs, some stocks. And you might think, because I have a lot of holdings, that I'm well diversified. But what we find a lot of time is we see a lot of red, right? Red is bad. So when we do this portfolio x-ray, or what we call as a correlation matrix, is we see that a lot of the funds that you own the exact same thing. So they have the same underlying stock. So you're not really truly diversified. So what you're seeing is when the market is doing great, that's awesome. You're doing great. Your account goes up with the market. But on the other end of the spectrum, when the market's down, your whole account's going down. You don't have a lot of that diversification in your portfolio. So what we like to do is have that portfolio x-ray to give you an analysis on how are you currently diversified? What holdings do you have? Do you have mutual funds or ETFs that are owning the exact same underlying stocks? And although you may think you're diversified, you're not truly diversified. So that's one of the things that we like to do for, people that are calling into the radio, is do that portfolio x-ray. The other aspect of it is, from an advisory standpoint, we take a very proactive approach here at ProStatus. So we're constantly adjusting the portfolio based on the volatility in the market, what's happening, what we're seeing, what tweets, or I don't know what they're called now, are going out there. But we're making adjustments accordingly. So it's a very proactive approach, not a reactive approach.
We are actively managing your investments.
Exactly. Yep. So as even our most aggressive clients, even if you're 100% in the market, we're taking measures to be more defensive, or move into cash, or adjusting the portfolio so that we're alleviating as much risk as possible. It's not just a buy and hold strategy, but we are constantly looking at the portfolio, making adjustments for our clients' behalf.
And again, that all starts by reaching out and setting up a time to speak with them. 866-597-1040. You don't necessarily, I mentioned the Goldilocks approach earlier. You don't want to be too aggressive if that's not what you're comfortable with. You don't want to have money, buried in your backyard, because obviously interest rates and things like that is going to reduce the buying power. Finding what's going to work out just right for you starts with setting up a time to speak with the team at ProStatus Financial. Lawrence, Samantha, the entire team, happy to sit down with you. Starts with that portfolio analysis. Perhaps you're taking more risk than you thought you were, because in the past couple of years, it's been pretty easy to say, yeah, I'm fine with it because the markets weren't having those hiccups. But now that they are more prominent, now that we are all closer to retirement, great time to take a look and find a way to make those moves. 866-597-1040, or go online to the website. Again, thesavvyinvestorradio.com. Click on that 401k X-ray button, front page, schedule that 15-minute conversation today. Thesavvyinvestorradio.com. I want to thank you, as always, for joining us here on the Savvy Investor Radio Show and podcast. Hope you have a great week ahead of you. Stay safe out there. Samantha, Lawrence, appreciate the time, as always. And as we wrap up here, I want to leave you with the final word.
This is Samantha Nash. Thank you for listening to the Savvy Investor Radio Show and podcast.
I'm Lawrence Kiley. We'll see you, the Savvy Investor, next time.
Advisory services offered through ProStatus Financial Advisors Group, a registered investment advisor. Insurance licensed in Maryland. ProStatus Financial Advisors Group, LLC is not licensed in all 50 states. To find out if ProStatus Financial Advisors Group is licensed in your state, please call 410-863-1040. ProStatus Group, LLC is not affiliated with nor endorsed by the Social Security Administration or any other government agency and does not provide legal or tax advice. Annuity guarantees rely solely on the financial strength and claims-paying ability of the issuing insurance company. By contacting us, you may be provided with information about insurance and annuity products offered through representatives of ProStatus Financial Advisors Group.